Alright, hi guys, welcome back to PKFX YouTube trading channel. Now, this particular video, I'm dedicating this video for my trade that happened for the past few days, and a trade that I'm holding right now as well, and a trade that I actually took a loss in, and all three trades were actually in gold, right? XAUUSD. So to start off with, I'd like to highlight that this past few days, I've been taking quite a bit of profits. Actually, it was back-to-back wins, as we can see over here. Minus out one trade that I closed in a break-even, and then back to wins as well. And finally, this winning streak uh, got stopped out with a stop loss, and it was because of gold, and it was not really a good trade. So I would like to document here what exactly happened and what I see potentially happening in the future as well, and what can I do in order to prevent such a thing to happen again. Because I'm pretty sure if you're trading as well, you would have gone through a winning streak where you suddenly have like some sort of overconfidence building up, and eventually you start taking risk without even realizing that you're actually messing up and you're actually deviating from your plan, from your strategy. And I believe that's exactly what happened to me as well. As I was making back-to-back wins, most probably I decided to enter this particular trade out of anxiety. My emotions was not calm, and it actually reflected exactly as it is, and I documented everything. In fact, I marked this particular trade as red because this was a trade that actually deviated from my plan. Now, to very quickly walk through this, the trade that I previously took was a beautiful 1 to 2 risk to reward. If I go to the 2 hour time frame, so this was the back-to-back win that I had on gold. Previously, I took a sell on gold, and it went beautifully to a 1 to 2 risk to reward, and I made 2% over here, followed by another trade where when the momentum shifted back to a buy, I made an entry over here, and the market beautifully rallied to my TP. I could have held this trade longer, but I decided to close, and it was coming close to the daily EMA. If I go to the daily candlestick pattern, it was coming close to my daily EMA. So I said, you know what, let's just close this trade and take profit. But as I zoom in now, after 2 days has passed through, you can see that this is where I took profit, and the market literally rallied all the way up. In fact, it went all the way up to the next particular point over here. This could have been easily a 1 to 5.5 risk to reward, right? But of course, yeah, should have, could have, would have. We wouldn't know. The best thing to do is to stick to the plan and take the 1 to 2 and bounce out from the trade. And that's exactly what I did, and everything was going well. Now, what happened next is what I'm not happy about, because upon this back-to-back wins in gold as well, once the market went all the way up here, I was preparing for a sell, which ideally showed to me that the gold trade right now is already like too much of an overbought. And the weekly EMA as well, if I go to the weekly candlestick pattern, the weekly candle has not closed yet, but the weekly EMA is actually over here. So I'm expecting some sort of a strong pullback either today or tomorrow. So this is where I kind of fumbled my trade. So what I did is I went down to the 30 minutes candlestick pattern, and I was pretty much looking for a shift of structure on the 30 minutes candlestick to indicate to me that the market is topping out and the market is now slowly reversing towards the downside. So as we can see over here, the market was still making pretty much a higher high, a higher low, a higher high, a higher low, and a new higher high. And ever since then, the market was pretty much ranging. All this is just ranging because this was the previous higher high in the 30 minutes candlestick, and this was the 30 minutes candlestick higher low as well, right? So as long as the market has not broken this candlestick, not this candlestick, everything else is pretty much just noise. Market is just ranging. And I clearly marked this particular line over here, right? If I go down to the graph over here, let me just pull this back. This line over here back then was something like this, right? Was something like this. So in fact, I marked over here 30 minutes, 1 hour, 2 hour is because if I go to the 1 hour candlestick, again, this is the higher high, this is the higher low. It's the exact area where the 1 hour will also shift into a sell. And if I go to the 2 hour candlestick pattern, once again, this is the higher high, this is the higher low. The same line is also, once broken, will shift the 2 hour as well. So this was a pretty significant line that I was waiting for the market to break. But what happened next is the sad part, where the market started pushing towards the downside and was starting to break this 30 minutes candlestick, was starting to break this particular line and break this EMA as well, and was rallying pretty quick. Now, what I did, I immediately jumped into the trade without waiting for the 30 minutes candlestick to close. In fact, I still remember I had like 26 minutes out of the 30 minutes. Only 4 minutes has passed and the candle was pretty much dumping down. And I thought I'm going to miss out on the trade. And I immediately jumped in over here for the trade. And what I did, I went down to the 15 minutes candlestick and I tried to justify myself for that particular entry point. And I said, you know what, this is the higher high and this is the higher low for the 15 minutes candlestick. And as long as I'm breaking over here, which is this candle, when it broke this and when it was dumping over here, I said, you know what, the 15 minutes has already shifted into a sell and it has given me a very good engulfing candle that is sufficient for me to enter the trade. And this is exactly where I entered. This definitely is not according to my plan, because I'm not trying to scalp over here. I'm trying to day trade to swing trade, right? So it's long-term perspective. And 15 minutes, if we notice over here, it within a short period of time keeps shifting from a buy to a sell to a buy to a sell. For example, over here, this was the higher high, right? If I were to just pinpoint over here, this was the higher high, higher low, higher high. So it's in a buy, higher low, and a higher high, still a buy, and then immediately shifted into a higher low, and this became the lower low when it broke this structure. So a buy shifted into a sell, and again shifted back into a buy, and then again over here it was still a buy, and then once again when it broke over here, it's a sell. Now, within this period of time, within a few hours here and there, the market has been shifting buy and sell and buy and sell. So there's so many different, not so accurate kind of direction that 15 minutes time frame was giving to me, and that was not sufficient for me to take a trade, right? But during that particular moment when this was happening, I actually went back to the 15-minute candlestick and I took the trade, and look exactly what happened, right? Right after I entered, which was pretty much the worst situation to enter, the market literally bounced and went all the way and hit my take profit within the next 15-30 minutes. Within 30 minutes, in fact, if I go to the 30 minutes candlestick, I pretty much got wicked out in a single candle. That's terrible, right? That's actually terrible. I literally got wicked out. And it didn't work as per my plan because, first of all, the 30 minutes candlestick never closed below this white line that I drew over here, which I should have waited, right? It never closed below this EMA over here, which I should have waited. I never got a candlestick close confirmation, and all that the candlestick did was it dumped all the way down, pulled back and closed above, and the next candle literally reversed, and I took a 1% loss over here for my gold trade. So basically, whatever that I made over here, half of it I just gave back for no reason. And all I should have done is just wait for a shift of structure. So I took this loss, and that was mainly because the market was moving so fast and I went down to the lower time frame. So I kind of journaled this accordingly for this particular trade over here. I mentioned clearly that in terms of emotion, I risked 1% for this trade. I had a fear of missing out. So I said here, trade reason, this is a bad trade. Technically, it's a pro-trend trade, but the weekly candle broke strong with a bullish engulfing pattern, which if it closes Friday, will make the weekly as a buy as well. So I'm selling, but the weekly is about to change from sell to buy. In fact, it looks very clear that it is changing to a buy, right? Also, the daily, the 4 hour, the 2 hour, the 1 hour, the 30 minutes, pretty much all the time frames are all a strong buy. So I can actually consider this particular trade as a counter trend trade sell, right? I'm going completely against the trend. My plan was to wait for the 30-minute shift of structure that will provide proper break below the 30 minutes EMA, as well confirming the direction, right? That was the plan. But the same break point will also shift the 1 hour and 2 hour candle if closed below as a sell as well. So this is the further affirmation, right? But what I did was, when the New York session volume kicked in, I got fear of missing out as the 15 minutes candle printed below the 30 minutes EMA and that I may miss the entry. So I literally chased the trade over here. So my confluence was based on 4-hour area of interest that was also not as per plan. Usually I look at the weekly area of interest or the daily area of interest, but in this case I was literally searching for a 4-hour area of interest last minute just to make sure that I can enter this trade. And a 15-minute shift of structure and a 15-minute engulfing, which is not really a good shift of structure and not really a good engulfing candle because it keeps jumping from a buy to a sell to a buy to a sell more frequently compared to the higher time frames. So since my judgment is not based on my original plan, I marked this as a bad trade as it was emotion driven. This is the key point. I actually felt the emotion. Upon entering the trade, I really didn't feel calm. I didn't feel uneasy. I felt anxious. And I know I made a mistake. And the the trade pretty much hit stop loss before even I could finish journaling this particular trade, right? So what can go wrong? I mentioned over here, the stop loss placement, since goal risk is limited to 1%, the stop loss is not placed at a point where if it hits, I'm completely wrong. This is very risky trade. So what I'm trying to say is the stop loss for this particular trade, if I go down over here, right, to the 30 minutes candlestick, right, the stop loss was here. But ideally, this is the, if this was indeed true that it is actually shifting, right, this is the 30 minutes lower high. The stop loss should have been above this week, right, over here this week, and another 10 to 15 pips breathing room. So the stop loss should have been way higher if this is the entry point. But the risk to reward, of course, does not make sense at all. Hence, I placed where it makes sense for a 1 to 2 without risking more than 1%, and the stop loss completely does not make sense, right? And obviously I got wicked out over here because we see that the market eventually rolls back towards the downside. If my stop loss was something like this or above, right, I would have still been in the trade. But because I only risked 1%, I took a loss. And this loss probably is one of the fastest loss that I've ever taken because it was completely off from my plan. Now, coming back over here, the results. Market never gave the 30-minute shift of structure and the market held the 30 minutes EMA and immediately reversed to the upside and hit my stop loss the very next candle, right? This was a stupid mistake purely out of fear of missing out. I waited patiently for so long only to mess up last minute during my entry. My emotion was angry at myself after the trade. I was pretty much angry at myself after the trade. So I could sense it, so I journaled it down. So ideally, I should stop trading for the week. If I don't see any more good setup, or if I feel like my emotion is not calm back again, I shouldn't trade anymore, right? So the lesson learned, never use 15 minutes as confirmation. It gives too many unreliable shift of structures, like I showed just now, right? So remove from trading view time tab. Make it mechanical to only check 30 minutes as lower time frame. And do not trade using 4-hour area of interest wherever you can, and this is not per plan at all. So this trade, I've journaled it, I took a loss and it was completely off from my trading plan. In order for me to not make this mistake anymore, I gotta make some sort of a mechanical changes so that I do not trade the 15 minutes time frame anymore. And the best way to do it is, I think I should remove the 15 minutes tab over here that I've bookmarked. Because as long as it's here, I can always click the 15 minutes time tab and I can always go down to check on the 15 minutes, and eventually this is now leading me to take a decision based on the 15 minutes. So what I'm going to do, I'm going to remove this 15 minutes line item from here so that I don't look at it anymore, right? And I'm going to click this button over here and I'm going to remove this bookmark of the 15 minutes so that the 15 minutes is no longer there anymore. So okay, so I've already removed the 15 minutes, basically removing the bookmark of the 15 minutes so that it is not in my favorite step. That way, when I go down to check the lower time frame, it's only the 2 hour, the 1 hour, and the 30 minutes, right? The most I'm going down is 30 minutes so that I can reduce the amount of unreliable shift of structure and try to focus on the lowest time frame as 30 minutes to take any sort of trading decision. I believe by setting this sort of mechanical barriers in place, uh, I could actually, avoid myself from trading based on emotions, because during the heat of a moment, highly likely that I may tend to, go back and check the 15 minutes charts and take decision based on the 15 minutes chart, and then taking losses that I'm not supposed to take and giving back, entire thing that I made out of gold. So I believe this is a very good lesson learned that I've already updated in my trading journal. So I've already took another trade over here for gold as well. And the reason being, most probably this is going to be the last trade for the week. The reason being is simply because now if I look at the 30 minutes candlestick, finally the market actually broke over here. So once again, if I look at this particular chart, now coming back, isn't this what I was waiting for, right? So this was pretty much a fake out, and I entered here and I took the loss over here. But the market eventually rallied back down and broke below. So ideally, this is where I should be getting my 30-minute shift of structure confirmation. In fact, when I came back, I actually left the chart because my mind was not clear. I went back home, I took a shower or whatsoever, and then I came back and I looked back at the chart. And when I came back and I looked back at the chart, the 1 hour candlestick clearly gave me the shift of structure that is needed. So 30 minutes shifted sell, 1 hour shifted sell, and the 1 hour gave me the beautiful engulfing candle, right? And I finally decided, you know what, let's not take the previous trade into the current trade. Every single trade is individual and unique by its nature. This was the original plan. I wanted to enter upon a shift of structure in the 30 minutes candlestick where it also breaks below the EMA, and it has created the head shoulder pattern that broke and retest the neckline, and I entered during the retest of the neckline. So here now I followed my trade and I followed my plan. So I pretty much documented this trade over here. I clearly mentioned here that the emotion at that point of time when I entered back this trade again, I risked 1% for this trade, but my emotion was calm. So now it kind of makes sense to take this trade, right? Trade reason, this is a repeat of the previous trade, but I'm finally taking it as per plan. I have 30 minutes and 1 hour shift of structure and 1 hour engulfing candle to confirm sell direction. I did not look at the 15 minutes tab. Actually, I removed it and I created that mechanical barrier to my own self by removing the 15 minutes bookmark completely. My emotion was completely calm as I understood the previous mistake and I entered a decent trade. The 4 hour area of interest in this case is a valid area of interest, so I still kept it. When I looked for the entry point, it still rejected out of the 4 hour EMA, came back and retest and then pushed back towards below. So it was still a rejection from the 4 hour candlestick. If I go to the 4 hour, this is the solid rejection point from the 4 hour area of interest and continuation towards the downside, right? So everything made sense at that point of time, right? And I risked it. I pretty much entered a decent trade, right? Ideally, I try to skip working with the 4 hour area of interest and stick with daily and 4 hour area of interest. So I need to go back to this, right? I shouldn't be. This is what happens when you keep looking at the charts way too many times in a day. You start drawing more and more support and resistances. So I need to stick after this for the upcoming trades to just focus on daily and weekly and not go down up to 4 hour as much as I can. What can go wrong over here? So stop loss, I placed it about 6 pips above the 1 hour lower high, and if it hits, most probably the 1 hour is shifting back to a buy. It is not the best stop loss placement yet, but this is the best I could do with the current account size without risking more than 1%. So what I'm essentially saying is if I go down to the 1 hour, right, this was the bearish engulfing candle that I got, and upon the pullback is where I entered this particular trade, and I actually gave my stop loss a breathing room. This is the lower high, right? I gave about 6 about 6 to 7 pips above this, so that if the market decides to continue to rally towards the upside, and if it hits at that point of time, most probably the 30 minutes and 1 hour is also shifting bullish. That means I'm completely wrong in terms of the direction, and the market is going to continue to rally towards the upside. So I'm fine in taking that loss. So once again, I also understand that I'm trying to sell into this zone. So technically, it is like selling into the support. Ideally, we shouldn't be doing that, but I'm basing it based on the weekly candlestick and where exactly the market is. And I'm expecting the market to come down below the weekly EME and eventually close below the weekly EME, and the following week to have some sort of a pullback to retest this breakout, right? This is what I'm expecting based on the market position to justify why am I selling this particular trade. Now, if I'm wrong and the market continue to rally towards the upside, it's okay, it's fine. I'm willing to take this loss. Right now, in fact, it went down on a small profit, and then right now it's coming back into a small losses. So if at all I take this loss, I'm fine with the loss, right? Because this is a reasonable trade. It's okay to take this loss, but this loss previously is definitely not okay to take this. So I decided to journal this particular trade, dedicate this video for gold, because there's a lot of lessons learned over here. I learned about how can I set a mechanical barrier so that this particular mistake does not happen in the future. Right now the account is still small, so it's okay. 1%, when I look back at the dollar value, it is still very small, no issues. But imagine not documenting this, not journaling this, and making this mistake in a very big account in the future. It's gonna be disastrous, right? So that is the key importance of journaling every single thing, and mainly your emotions. And if you can, give some color coding so that you can highlight that, hey, the rate indicating don't repeat this anymore, and then review this based on lessons learned, so that when you get your winning streaks like this, it doesn't screw you up and it breaks the winning streak by inputting a losing streak, a losing trade now. So that's about it, guys. That's the quick update on the gold trades. Overall, I'm still happy regardless whether this trade goes in a win or a loss. If it's a loss, then I took 1% loss here, I took 1% loss here. Eventually that means that the previous win that I had 2%, I gave back to the market. That's what it is. So I'm willing to take that risk based on my previous win. It's okay, it's fine. But this is the trade I'm currently in, gold for a sell. I don't know what's going to happen, but let's see. All right, guys. Thank you so much for your time, and have a good day. Take care.